Hi there, Pragati here. Welcome back to my video. Now in this video I would like to share with you the difference between purchasing a property on a limited company or purchasing a property in your sole name. So I had a few requests to do a video on this particular topic. I've got a property both on personal as well as limited company, so I know some differences, and I would like to share with you a recent example. Okay, so here are some of the figures. Now this a loan based on £64,500 under a 2-year fixed interest only mortgage came out to be £114 per month at an interest rate of 2.11%. Right, so this is under a sole name, personal name, whereas on the same 2-year fixed period on a limited company the interest rate was 2.59%, giving you a monthly mortgage of £193. Now, one of the biggest advantages of buying a property on a limited company is that you can claim all of your mortgages as expenses, so giving you less tax to pay. Whereas on a personal name, none of the mortgage from this year on you can claim as an expense, so which means you'll be actually paying slightly more tax because your profit will be higher since you're not able to claim any of the mortgage into expense. Now, on that example that I gave you earlier, there was a £79 difference per month that you'd be paying on mortgage if you were doing it through limited company. Multiply that by 12 gives you £948 extra annually paying on mortgage because the interest rate is slightly higher. If you add the corporation tax, accountant's fee, and if you add the company setup fee, so it's roughly about £1,200 annually that you would pay anyway by buying under a limited company. Now let's look at the personal name. Under the personal name you're paying £114 per month, and let's say you're paying a high tax rate, which is a 40% on all of that mortgage, right? So 114 times 12, that gives you the annual, and even if you are paying a 40% tax on all of that, it's only about £547 extra that you would pay for having the property in your sole personal name. So if you just look at the scenario, on the limited company you are paying almost £1,200 annually, whereas in the sole name you're paying only £547, which is less than half. So in this particular example it seemed like buying through the personal name was a lot better because you're not paying so much extra, but this is not going to apply to every scenario and every person, because every one of us, our financial situation, how we are taxed are different, so you do have to consult your tax advisor for detailed analysis of how it's going to impact you and which one's better. But this is just an example of what was given to me, but it may not apply to you. Hopefully that was helpful and gave you some information about the differences, especially on the interest rate and on the monthly payments. Thanks again for watching until the end of the video, and I will see you on the next video.